Good morning, everyone. It is Friday, February 27th, and we are heading into a long weekend here. So what does that mean for today? Probably a little excitement here this morning, and then nothing. Probably be very, very quiet, especially as we get close to that noon hour. I would expect maybe the first hour, hour and a half, maybe even 2 hours, we'll see some excitement, especially given the overall look here in the market. This is a look at our futures. This is the S&P futures chart. And I always point that out because it does look different than the SPY chart because there's no gaps left in it. But check this out. We talked about this yesterday. This is the volume profile down here. We talked yesterday that we moved up on lower volume. Didn't really love that, but we are going into a 3-day weekend. So if it were a regular weekend, would we have had more volume? We don't know. We have no idea. But we have to deal with what we have right here in front of us, and that is an inside candle being put in on yesterday's action. We had a nice little 3-8 cross that confirmed, moved up over the 20 yesterday. Like I said, a bit lighter volume, but not so light that I'm really worried about it. You can look back here on some of these other rally days that just did not pan out at all. It set us up for, in this candle in particular on 4-4, that set us up for the bear flag, right? Bear flag. So we have seen this quite a bit. This doesn't feel quite like a bear flag because we've now had several days and the amount of the move up. So we're going to keep a very close eye on this. You draw this trend line in, right? And we stopped. We pushed through it, but closed just below it yesterday. We're using it this morning. We'll see if we continue to move up toward that 34 EMA. That's an exponential moving average. But again, we're coming into a weekend, so our volume's probably going to be very, very light. How do I plan on playing today? Look for some early momentum movers, day trades only, and then step aside. Let it go. No reason to force anything here as we move into that long weekend. And the bond market, I believe, closes early today. So I'm not positive, but I think it does. Excuse me. Yep, tired. I'm old and I have 2 young kids in the house. So, okay, so this is what it looks like here. Let's take a look over at what it looks on the SPY chart. So I know it looks a little bit messy here because I have all of these lines on here. But you can see tap, tap, this particular trend line. We've now tested 4 times, used it, and have now moved on. This was our upper trend line. We used that yesterday, pushed on very nicely, again, above the 20. And now we'll see if we get that continuation. We are looking green to start the day. 405, 90-ish. So we'll say, right, so not as high as maybe some of us would like to see. But I would love to see a bit of a pullback here right in the beginning of the day, maybe tap up on this fib line, and then continue on and build a little bit more volume. And like I said, over the last several days, we put in this little range, and the volume was kind of meh, nothing exciting, and still just kind of meh going into today. So again, be cautious. You don't want to get caught in a bull trap, right? Is it a bull trap? I don't know. Is it a bear trap? I don't know. We don't know until it's played itself out. Another thing that could be getting ready to play out is this kind of shallow inverse head and shoulders, which means we may have one more push up and then come down and then make that right shoulder. We don't know yet. We are waiting to see this play itself out. So again, today, just be very cautious. Sectors across the board yesterday looked pretty darn good. There's technology testing the 20. We have seen, although a pullback on energy has been incredibly strong. If you're not sure which sectors are performing well, I highly encourage you to go to this free website. We love free, right? Oh, wait, let me get the ad off there. Of course, with free, that means you have to watch ads. But FinViz, right? So this is how we closed the day yesterday. Pretty impressive, right? Where were we playing? Look under groups. If you hit groups, 1-day relative performance. Look at this weekly performance. We're going to talk about that here on the charts in a minute. Look at this weekly performance. Impressive. 1 month performance. See, this is the big picture. You have to go and look, not this all beautiful, right? We're like, woohoo, yeah, let's throw our money in. No, and then you look here, you're like, well, maybe I'll be a little bit more cautious. Of course, seeing that energy has been the biggest benefit here over the last several months, and that is not just the inflation. It has a lot to do with the geopolitical landscape at the moment, with the Russian-Ukraine war persisting here. Okay, so there we go. That's what we look at. Always check that out, and it updates during the day. So go and check it out during the day. If you're not really sure, maybe you don't have a watch list set up of this major sectors, go take a look. It will give you a good idea. Now, as promised, I am going to look at the weekly chart. So here we are, the daily chart. Again, right, 1, 2, 3, 4 taps. We're moving along. But look at this. Whenever you're in doubt of what actually is going on, take a look back and look at the weekly charts. Now I see that this is kind of hard to see in here. I'm going to pull it up in a minute, but here's something I would typically do. This is the pandemic low. Tap it there and pull that trend line up to our most recent. I know it looks like pickup sticks over here, right? Or some kind of modern art something or another. Okay, well, and real quick while I'm here, this line here, this yellow line that takes us right to that gap, is the measurement from the top to the bottom of the pandemic, right? That pandemic move. And that's kind of what I've been gauging on. When you pull it out like that, you do see the fib line, right? We nailed that fib line right here. Here's the neutral, right? We nailed it. So this would be the 50% retracement. Nailed this one. Right. It's interesting how they work, isn't it? All right. Anyway, that's why we watch them. But I want to highlight this real quick. Actually, I'll just take this off and put it back on later. Okay. This thick line is our weekly open. This is where we open the week. You can see, although we dip below, we have definitely held that price and moved along. This line was just previous resistance. So I'm going to go ahead and now take this out. Well, maybe not on this chart. I'll have to go to a daily. Right, but now we see we have put in thus far an inside weekly candle. Why is that important? Well, because if we stay inside this week, next week we can come in and look, we break to the top side, that gives us more confidence at a short-term bullish trend. If we come in, maybe even put in another inside candle, pure indecision. And of course, if we break down, well, that is a breakdown. That seems pretty simple, right? All right, so I know lots of trend lines. It looks kind of messy, but it really does help the overall look. Go to your weekly charts. See what they are telling you for the overall trend, and you can even pull out to those monthly charts. Here's what we look like in the Qs. Very similar. Inside candle. A little weaker here on the Qs on that inside weekly candle. Now watch this. We're going to pop over here to the monthly, right? Monthly gives us a very different picture. So not all of these longer term charts are in harmony as of yet. And that's really what we're looking for. I know people are like, you're going to wait for a monthly chart. Well, for those longer longs, yeah, I'm totally going to wait for that. The market to tell me that we're actually going to move back to the upside. The other thing here on the SPY monthly chart, you see this, the 3, the 8, and the 20. This is in a TTM squeeze. I don't have the TTM squeeze indicator up here, but I'd be willing to bet dollars to donuts. Not that I can eat the donuts, but that is exactly what is going on here, that we have a TTM squeeze going on and waiting for it to fire one way or the other. So the other thing to note here on volume, today's the last day of the month, and we've actually held in some pretty okay volume on the month. We see here last month we had dropped off, right? But since December, we've really picked up volume compared to where we had been for a good portion of the year last year. Okay, so let's go back over here and look at a few other sectors. We are seeing a little bit of red here in energy. This is the oil chart. Really just a little bit of a break. We're caught in between these trend lines right here. Not a big deal. Watch. I have a feeling this will, maybe a day or two break and then turn itself around. And then gold. Gold continuing to just channel here. Really stuck inside candle forming so far today. Yesterday was an inside candle. Oh, actually, it's not an inside candle. I'm sorry. Yesterday was an inside candle. We broke top side today, but right back into it. Now I want to talk a little bit about Bitcoin. Bitcoin, this is the fishtail we have been watching for quite a while. We have since today broken to the downside. Will we come back up and finish inside this squeeze? Maybe, and then maybe at that point we will redraw our trend lines. But as I look at, well, you know, it's probably really hard for you to see. There we go. As I start looking here, I'm starting to see actually more of a downward descending channel, right? I know that a lot of you are in Bitcoin or Bitcoin plays. We don't like to see that. But it doesn't matter what we like to see. We have to watch what we are given, and this is something to definitely pay attention to. Are we going to channel and continue to move down until we get a really good catalyst? We just don't know. All right, so for today, I do have some Citigroup that I took yesterday. I'll continue to hold that here and monitor it into the morning. XLF as we take, so the XLF is the financial sector. Looking at that here today, XLF is actually green, whereas Citigroup is not. So it has pulled back in just a little bit here. We'll see if we get a little bit of a pullback and then a push, and I will continue to monitor Citigroup throughout the day. So watch for an alert on that. And I did take the shares, but I put out there that I really do like the 55 calls. 55 calls is what I was looking at. And of course, as SPY goes, so does Apple, or maybe the other way around. As Apple goes, so does SPY. Beautiful engulfing candle on Apple. Check it out. We engulfed here on the 25th, so Wednesday. We engulfed Tuesday and even Monday. Big 3-day engulfing candle. This morning, you'll see the 3 is actually touching the 8 here pre-market. Not that it matters pre-market, very close to touching it. Yesterday, we closed over the 8. We now need to see, for if this is the bottom, we need to see the move now forward, pulling that 3 up over the 8 and working toward the 20. Again, you could probably make the case for an inverse head and shoulders here as well, which means maybe another day up or so and before we pull back and make that other shoulder. Again, we don't know that's what's going to happen, but we can start to see that, maybe prepare, watch for it. If it does play out, then we know how to play that. If we get that other shoulder, we know that we can play for the breakout back toward the 200. All right, everyone, that is it for me here today. If you have any questions, heatherc@givingtreetrading.com. I'll be around most of the morning, and then probably like everybody else, fall asleep, head on the desk. If you hear a big thud, that's what it is. All right, have a great day.